We are repeating the dot-com bubble. It's just last time we built it over 4 years, this time we built it over 7 years. But it's the same thing. We were building the bearish divergence, and then when the momentum is low enough, we're just gonna break towards the upside and the crash is gonna be devastating. The question is just when does it gonna appear and how much higher do we actually get?
Are we in the biggest bubble we have ever seen? And is it about to pop right now? If history is any indication, then we get some warning signals here that this might be the case. Usually when we get signals like that, we have a big crash following. It happened to us in 2000 and it happened to us in 2008. And both times the sign predicted us that this crash was about to happen. But when does this crash occur and what does that really mean to me as an investor? In today's video, we will try to find out if we are already in the big collapse or if there is still some time and how you can prepare yourself for this outcome. So make sure you stay until the end to get prepared. But before we go deeper into the signals and into the signs, I want to ask you to define what are you? Are you a day trader trading short terms 10% up, 10% down? Are you a swing trader looking for the longer term but taking the big movements and buy and sell with them? Or are you a long-term investor just investing monthly to actually earn money for the long term? Depending on the type of trading you do and depending on your plans, the actions and investments you should take are very different. So it's really important that you define your strategy and that you stick to it. Because if you say you're a long-term investor but you act like a trader and you sell every little up and down, then the investments and the outcome may not be what you want it to be. This usually leads to an outcome that you don't really want. So let's dive into the big question. Please make sure that you like this video. You help me a lot with that to support this channel so I can spend even more time in the research and creating these videos for you. And now the big question. Are we in a much bigger crash right now that will lead to devastating losses like the dot-com bubble, 50% and more even on the indexes? If we focus on the data, some signs say yes, we are. We are building very similar patterns than we did in 2000. We can see it in this chart. Momentum is dropping while stock prices are rising. In 2000 we did exactly the same thing and it looks like we are repeating these patterns. Many single stocks like Nvidia, for example, are printing this pattern, and even the S&P 500 and the Nasdaq 100 are printing this pattern since 2018. We have seen the same things during the dot-com bubble. Back then it took about 4 years to play out and lead to the market crash. Right now we're in this pattern for more than 7 years. So far it has been taking much longer this time because we are keeping markets artificially up by injecting stimulus and lowering interest rates. Every time we lead to a crisis, we artificially avoid it by pumping liquidity into the markets. This might work for some time, but at some point the momentum is going to be too low to keep it artificially up. And then stimulation is not going to work and we eventually see a much bigger crash happening. So is the move that we've started last week just a temporary breakdown or is it the final collapse? Both is possible, so let's look at both sides and figure out if we should just take our money and run or if it's maybe a good buying opportunity and we still have some time left. After, I will tell you how you can prepare yourself for what's coming. And never forget, bull markets make you money, but it's the bear markets that make you rich. So what arguments are telling us that this might be the final collapse? When we look at the S&P 500, we can see that on the RSI, the last time we reached a level of 73, it was actually the last bounce against the bearish divergence trend line that showed us the losing momentum before we crashed fully. This trend that we're seeing on the RSI shows us that momentum is going down while price is going up. So we are losing fuel behind the drive of the trend that we are actually in. This pattern means that we are losing momentum while price is actually trending higher. This is a sign that the drive of the uptrend that we have is losing on strength. Usually this plays out with a big crash to the downside at some point to reset the momentum of the market. To continue an uptrend that we have since many years, momentum needs to follow. If there is no momentum, at some point we cannot continue. And price will follow. Right now we're at the same RSI levels we've been in 2000 before we got the final rejection and the final crash. So this is definitely a warning signal that we are entering dangerous territory. So yes, it looks very similar to the 2000s, but to me the movement looks much more like 1998, when we had the Russian and the Asian financial crisis and the big hedge fund LTCM actually went bankrupt. Back then we had a decline right now. It was very sharp and short-lived, and the Fed stepped in to bail out the hedge fund and to actually lower interest rates 3 times and send the market onto another rally for the next 1.5 years. We could gain about 65%. Right now we are close to a similar moment. The Fed said they are ready to step in to save the markets if necessary, and we have 2 to 3 rate cuts planned for this year. But once again, we cannot ignore that we are running out of fuel here and that the momentum is getting towards critical levels. This means that any unexpected event could finally break the markets and we cannot recover from that so quickly. Another argument for a market crash is inflation. It is much higher than it was 1998. We are falling, but we are still above levels of 1998, which makes it very difficult for the Fed to actually step in because they are risking another rise of inflation. It also means that if the Fed steps in, it's possible that the markets break much faster and don't have an upside of 1.5 years like last time when inflation comes back faster. So for sure we have some arguments for a market crash, but there's also some against it. Let's have a look at that. Right now we have the Fed. We have high interest rates, we have falling inflation, and we have an artificially implemented crisis. Trump and his tariff policies put the markets down. I want to question if this is really a crisis, and therefore we have to define what is a crisis. Is a crisis something that I can artificially induce and take back? Or is a crisis a situation that gets out of hand and nobody can actually stop it? So when we focus back on the charts, we can see a sharp decline like 1998. We have the possibility for the Fed to step in. That's what they did in 1998. And then we had a rebound. So I see it more likely that the same thing is going to happen this time. The Fed steps in, we recover because we have the tools to actually act. When I would really get worried is when we get into a crisis that gets out of hand, that is not based on things and policies that we can take back, or we take things back and markets don't react, or the Fed doesn't have the possibilities to do anything anymore, like we already have lowered interest rates or inflation is rising, because then we are losing the tools to artificially save the markets one more time. So far, I don't think we're there yet, but the risk is definitely rising. So make sure to be aware of that. And if you want to sell some things, wait for signs of strength and sell into strong markets and strong movements and never panic into weakness. It's very likely you're going to hit the bottom and it's not what you want to do. To sum this up and be clear, how can you position yourself right now and what might be the best strategy for you? Once again, here it's very important that you know yourself and you know your strategy. As you heard, we have arguments for both sides. At this point, it's very important that you feel into yourself and make clear, okay, what is my strategy and what is my why? What do I want to make this money for and what do I need this money for? If you have short-term debts to serve, maybe it's not the best to take the risk. If you look for the long haul and you invest into things that you really believe in, like cryptocurrencies or stocks that actually bring value, and not a meme coin or something that is just a bet on higher prices, then this might be a really good chance to actually buy the assets that you believe in. I have already found some really interesting opportunities that are heavily undervalued, like Nike or Ethereum. Make sure to watch my last video on that to understand. And don't forget to subscribe to my channel. Within the next days, I will share more heavily undervalued opportunities with you, and I will keep you updated on where in the market cycle are we standing and if anything fundamentally changes. See you next time. Thanks for watching. Ciao.